of all, let me tell you, if person A is indulged in a business, if person A is indulged in a business of manufacturing, and further in the process of manufacturing he will be purchasing the raw materials, he will be spending the money on the marketing and finishing of the goods, and ultimately he will be spending money, or he will be having the expenses on the sales itself, and further he will be getting the revenues. So there are cash inflows and cash outflows. So cash outflow we mean when we are spending money, we are having expenses, okay, and when we are having incomes or revenues, those are basically your inflows, okay. So now it is quite much difficult for the person A so as to manage the finances. He needs to have a clear picture regarding that what amount he is spending and what amount he is earning, and ultimately he wants to know the clear picture regarding the business itself, okay. So during that course of the process, he needs to first of all enter and to manage all the transactions related to the business. So all the transactions, I mean to say all the financial transactions, all those transactions which can be measured in the form of money, those all need to be maintained, need to be recorded, so as that he could get an idea about the business, okay. So that is bookkeeping. So when we are learning regarding, we are basically talking regarding that we need to enter and we need to manage all the financial transactions, all those transactions which can be measured in the form of financials or that can be measured in the form of money. Those need to be entered and need to be maintained. That is basically the process of bookkeeping, okay. And what is accounting? Accounting is something which is having a broad approach. So bookkeeping is part of accounting. So in case of accounting, we not only enter or manage the transactions, but we also keep an idea regarding it, that what kind of transactions we are dealing with, and further we maintain books, we draw books regarding profit and loss account is being maintained, trial balance is worked out, and all the things are also included in the process of accounting. And further, when we have complete accounting books with us, we utilize those books so as to look at the business scenario, okay. So that comes under the purview of the accounting. So that is basic the difference between the bookkeeping and accounting, first of all, okay. So now let us start with somewhat theory. I hope that you must have gotten a basic idea regarding that what is bookkeeping and what is accounting, okay. So let me tell you first of all that accounting often is called the language of business. So when we talk about business, we have to deal with the accounting so as to learn that how much profit we are going to make, how much expenses are going to be there, what is our net position, okay. So bookkeeping and accountancy, as I already told you, bookkeeping is different and accounting is different. Accounting is a wider concept, whereas it includes the bookkeeping itself. So bookkeeping is basically a part of the accountancy itself, okay. So what does bookkeeping means? Bookkeeping means recording the business transactions. So all the transactions related to the business which can be measured in the form of money, we need to record all those transactions, okay. So if we purchased raw material, if we paid the rent, if we paid the building rent, if we paid wages, if we paid any other expenses, those all also to be included, okay. Those all also to be recorded. We need to record all those business transactions, okay. And first of all, the business transactions are recorded in the books of original entry. We will be clearing in this particular concept regarding in our next unit, but let me tell you basically, first of all, what happens, we record the books in the books of the original entry, then the entries are then passed on the journal itself, then from the journal the trial balance is maintained, and further from that basically we conclude the balance sheet and the profit and loss account, okay. So that is the process that is included. We will be covering that differently in another chapter, but the point is regarding that in the process of bookkeeping, we record the business transactions, okay. We record the business transactions. So bookkeeping is the basis of accounting. So what is the basis of accounting? Bookkeeping is the basis of accounting, because if we have not recorded the transactions, how we will be concluding regarding the different books and the statements, okay. That is not possible. So it is responsible, it is because it is responsible for the proper recording of the financial transactions. So under the bookkeeping, what is the major task? The major task is to record the business transactions. That is the bookkeeping all about. Okay, so it is regarding identifying the financial transactions. As I already told you, only and only those transactions which can be measured in the terms of money, those are to be recorded. So we need to identify all those transactions, we need to measure, we need to quantify those transactions in terms of money, and further we need to record in the books of original entry. Is that true? After that, we need to classify them in journal. So we can say we are maintaining a lame register or simply a simple register where all the entries are located. That is basically your primary book. That is basically your primary book. Or okay, and from there we are specifying the entries into different books. We are specifying the entries into different books. Let us say some entries are related to the wages, some entries are related to the telephone expenses, some entries are related to the business overhead expenses. Okay, so that would be classifying them into journal. All that process comes under the bookkeeping. Okay, so it is regarding first of all identifying those transactions which are having financial nature, and further then quantifying those transactions or measuring in terms of money. After that, recording in the books of original entry, and further classifying those transactions into journal. Okay, so that is the process which is to be done in the bookkeeping itself. Then it is regarding the accounting. So as I already told you, accounting is a broader concept and bookkeeping is just a part of it. Okay, so the term accounting covers a much broader scope than the bookkeeping. So in bookkeeping, we are dealing with the one part only. Okay, where we were just recording the transactions, those were related to the business. Okay, accounting cover the aspects as designing bookkeeping system, that what would be the bookkeeping system, and establishing the control to maintain, how will we be controlling it, and how will we be operating the system, and further it is also related to analyzing the data. So whenever you record the transactions in such a manner that you can conclude something. That is basically for the purpose of analyzing the data from it. Okay, so accounting gives you data your business needs to make better decisions. So when I'll be having recorded all the transactions, and further I have drawn the different statements and account from those data itself, it would be then beneficial for me that I can draw inferences or I can draw ideas regarding that what decision is to be taken. So if I have plenty of assets, vacant assets which are not in use, I can make use of those assets. Okay, so that is the case regarding the accounting. So accounting also reviews financial reporting and performance. So it is also used for the purpose of financial reporting and performances. It is a case that you need to provide the data to the owners or shareholders or investors or maybe tax authorities. Okay, in that case you need to basically draw the statements. You need to draw the balance sheet statement, or it could be the profit and loss account that is to be mentioned in the case of the investors, shareholders, or maybe depending upon the other parties which are dealing with you. Okay, so if we take an example, let XYZ is a public limited company. And it has raised equity from the market. So there are shareholders, there are investors who have invested in this company itself, and further this company also comes under the purview of the different authorities now. Likewise, it is under the purview of the SEBI, Securities and Exchange Board of India. It is under the purview of the income tax authorities or other related authorities. In that case, XYZ is to furnish the different statements, okay, or the different data which is required by those authorities, or it could be the case the data is to be furnished to the investors, creditors, owners, promoters. Okay, so there are different scenarios. For that purpose, accounting is used. Okay, so accounting is mainly made up of recording expenses. You are basically doing what? You are recording all kind of expenses, you are recording all types of incomes and revenues, and further you are preparing company-wide financial statements. Okay, so there are different financial statements which are included, like there is a balance sheet, and there is a profit and loss account, and further analysis of the cost of operation. So basically there are different types of accountings which we will be learning about shortly. Okay, so there is regarding the cost accounting. There is also a branch said to be cost accounting. So wherever the firms are indulged in the process of the manufacturing or something, they need to analyze the initial cost so that there could be the state of break even point, and ultimately they could make profits. Okay, so if you don't know that where are you spending, where are you having the expenses, then in that case how would it be possible for you that you can know that what is your profit point or not. Okay, then it is regarding completing income tax returns. So companies have to file the income tax statements. In that case it is also the main purpose of the accounting, that why we are dealing with the accounts, and further helping the business owners in understanding the impact of financial decisions. So if you take one financial decision and there is a change in the position of the accounts of the company, then the owners can conclude from that point that it would be beneficial, it is in the trending lane or not. Okay, and accordingly they can take the decisions. So accountancy does involves the following. What does it includes in the case of the accountancy? First of all, systematic classification of business transactions. So bookkeeping is a part of what? Bookkeeping is part of accountancy. So you are systematically classifying the business transactions, means all the financial transactions are to be recorded in the books of account. First of all, recording of events and transactions in the books of account called bookkeeping. We have already learned that bookkeeping is part of accountancy. Then further, summarizing the recorded events. So when you have classified the different entries into the journal, then from the journal itself trial balance is maintained, trial balance is prepared. Okay, so when you prepare the trial balance, subsequently you prepare the balance sheet and profit and loss account from the trial balance. So I just told you the process. First of all, we record the prima facie entries, and then from prima facie entries or from the primary book entry, the entries are recorded into journals. Then after classifying them into the journals or posting them into the journals, then the trial balance is maintained or prepared, and after that you prepare the balance sheet and profit and loss account. Okay, so that is the process regarding it. Then it is regarding interpreting. So when you have drawn, or when you have basically prepared the balance sheet and profit and loss account, you can interpret the financial transactions. So that is regarding the ratio analysis. So we will be covering all the particular things regarding it first. So we will be learning regarding the different types of ledgers and books over there. We will be learning how to prepare the trial balance or how journal entry or posting is being done, and further after that we will be learning the different concepts regarding the balance sheet and profit and loss account. So that's a complete those are the different topics that we will be learning. Okay, so first of all, you need to know only that what is bookkeeping, what is accounting, and what they deal with. Okay, then it is regarding the features of accounting. What are the features of accounting? Accounting is art of recording, classifying, summarizing business transactions. So when we say regarding recording, it is basically the primary entry. Okay, when we talk about the classifying, it is basically what? It is posting them into journals. Okay, then summarizing business transactions, it is basically related to preparing the trial balance and further present them in systematic way. What is a systematic way to present them? It is regarding the balance sheet and profit and loss account. Okay, so it is in the form of the trial balance, profit and loss account, and the balance sheet. Okay, so those are the features of the accounting. Then it is regarding accounting records the transactions in terms of money. That is a simple thing to learn about, that everything that we are going to enter in the journals, or we are going to enter in we are going to deal with the trial balance, only those transactions will be dealt with which are there in the term of money. Okay, then it is regarding accounting records only transactions of a financial character, and accounting also interprets the financial data that we have already learned about. Okay, now let us learn about the different kinds of accounting. So I already told you that there are different branches of accounting, so we'll be learning regarding it. So first of all, it is regarding the stewardship accounting. It is regarding the stewardship accounting. So what happened in the earlier times or in the history? So wealthy people employ stewards. Wealthy people employed stewards or managers who were there to manage their estate, who were there to manage their property or their estate. So these stewards rendered the account of the stewardship to their owners. So whatever the accounts of the wealthy people, those were rendered by these stewards. That is why it is said to be the stewardship accounting. So basically it is a term which is related to the accounting which was used in earlier times. Okay, then it is regarding the financial accounting. Financial accounting involves recording and categorizing transactions for business. So when you are dealing with business, you are going to record the transactions which are related to your business, and further you will be categorizing those transactions, or you will be posting into the journals. Okay, so it involves generating the financial statement. So when we are learning about the simple accounting, we are basically talking about the financial accounting. Okay, so where we will be entering the transactions, posting the transactions, then further preparing the trial balance, and further we will be preparing the balance sheet and profit and loss account. That is basically related to the financial accounting. Okay, so all the financial accounting such as balance sheet, income statements must be prepared as per the GAAP. What is GAAP? It is generally accepted accounting principles. It is generally accepted accounting principles. We will be learning about it in this chapter itself. Okay, so then it is regarding financial accounting is done more for the use of the owners, creditors, regulatory authorities, taxing authorities, because it is not the case that the owners, creditors, regulatory authorities, taxing authorities need they know all pinpoints about the company. Okay, so these financial statements help these authorities, owners, creditors, so as to understand the position of the business firm. Okay, so that is the case. Then it is regarding the cost accounting. As I already told you that in the case of a company or a firm is indulged in the process of manufacturing, in that case they need to know that what are the expenses they are having, what are the costs, and what are the initial costs. So cost may be the variable cost. The cost which may be included may be the variable cost. Okay, so company XYZ, if it is manufacturing a product, let us say it is manufacturing product A, so it may be the case that some variable cost is there, or it could be the case that there is some fixed cost is involved in that particular case. In both these cases, these costs are to be recorded. So cost accounting concerns itself with the recording and analyzing all those costs that you are having, or all those costs which are occurring over there, so as to take decision regarding that you should be producing or manufacturing that product or not. Because if you do not consider all the costs, how it would be possible for you to consider that you are having a profit or not? Okay, so that is regarding the cost accounting. Then it is regarding the management accounting. What is management accounting? So what happens in the case of big corporates or companies, or in the case of even banking system also? So management accounting is basically concerned regarding presenting the accounts of the firm or the company to the management itself, so that they could make decisions based upon those statements. Okay, so when the management will be having the different statements regarding the company itself, they can take different decisions, different related decisions to the various matters connected with the routine or the non-routine operations of the business enterprise. Okay, so management accounting has thus shifted the focus on the accounting from the recording and analyzing the financial statements to using the information for decision affecting the future. So the core part is same, that is regarding recording and analyzing the financial transactions, but the application is different. That is why it is said to be a different branch of accounting. So it is management accounting. Then it is regarding the social responsibility accounting. So in this case also, we will be recording all the transactions or analyzing all the transactions, but the other aspect which will be looked into particularly, that would be regarding the social effects of the business decision. So whatever decision we are taking, depending upon the financial transactions or financial statements, how those decisions would be impacting on the social, will be having the social effects that we talk about in the case of the social responsibility accounting. Then it is a case of the HRA, or that is a human resource accounting. So HRA is a managerial tool that provides valuable information to the top management. So HRA is basically what? HRA is also a branch of the management itself. Okay, so in case of HRA also, we need to provide information to the human resource department itself, so that they can take important decisions regarding that if there is adequacy of human resources or not, or it could be regarding taking some important decisions regarding which can help in the overall business. Okay, then it is a case of the inflation accounting. So inflation accounting is concerned with the adjustment in the value of the assets. So what is inflation? So likewise, we had a machinery purchased in 2015, then the cost was rupees 1 lakh. Let us say the same machinery is having a cost today itself at rupees 2.5 lakh. 2.5 lakh. So it is basically due to what? It is basically due to inflation. It is basically due to what? It is basically due to inflation. So there is a historical cost concept in the case of the accounting itself. Okay, so what does that concept says? That concept says that we record the cost of the asset at the time of purchase. So whatever value or whatever cost we paid at the time of purchase, we consider or we book that particular cost only, that particular value only, so as to consider the whole accounting part. But inflation accounting is concerned with what? It is concerned with the adjustment in the value. So there is difference in the value of the asset. There is adjustment in the value of the asset. So there was, the previous cost was rupees 1 lakh, but now the current cost is 2.5 lakh. So we will be working on the inflation factor over here so as to work out the present cost. Okay. Then it is regarding accounting standards in India and its definition and scope. So whenever we are going to deal with some procedures, there must be some standards and there must be some procedure itself, so that we could utilize those standards and guidelines so as to make proper financial statements as per the trends and as per those guidelines. Okay, so the accounting standards are issued by ICAI. So you need to memorize this. ICAI is what? ICAI is Institute of Chartered Accountants of India. It is basically the supreme authority in India itself. Okay, so the accounting standards are issued under the authority of the ICAI, that is Institute of Chartered Accountants of India. So Accounting Standard Board ASB was constituted by the ICAI on 21st April 1977. So ASB was constituted, the Accounting Standard Board was set up by ICAI, which is Institute of Chartered Accountants of India. And what was the main function of this board? It was to formulate accounting standards. It was to formulate the accounting standards. So the ASB forms the accounting standards, and the council of ICAI may mandate such standards. So such standards are formed by the board itself, that is the Accounting Standard Board, and under the council of the ICAI these standards may be mandated or not. Okay, and further, under the section 129 subsection of the 5 of the Companies Act 2013, where the financial statements do not comply of the accounting standards, so wherever it is mandatory, first of all, that the companies must comply with the accounting standards, and further those accounting standards are not complied with, in that case the companies need to tell that wherever the deviation is, they need to report those deviation. Okay, what does it mean? It means under the section 129 subsection 5, if it is a mandatory for the company XYZ to comply with the accounting standards and it does not comply with, and in case it is having some deviation, it needs to report such deviation, and further reasons for the deviation must also be given, and further if there is any financial effect to that deviation, that must also be accounted for. Okay, so if the company XYZ was using SLM, that is straight line method, and let us assume the accounting standard says that you need to utilize the WDV method, so whatever the financial impact is there, that must be accounted for, that must be reported, and whatever the reason that they are not complying with the accounting standards, that must also be given, and further the deviation must also be reported. Okay, and the accounting standard is mandatory for which one? Accounting standard is mandatory for those enterprises whose equity or the debt securities are listed on a recognized stock exchange. So if there is some company, if there is some enterprise whose equity or debt securities are listed on recognized stock exchange, or those who are planning or is in the process of issuing the equity and debt securities, those must comply with the accounting standard, that is mandatory for those enterprises. And moreover, all other commercial, industrial, business reporting enterprises whose turnover for the accounting period exceeds rupees 50 crore. So wherever the turnover exceeds rupees 50 crore, in that case also it is mandatory to comply with these accounting standards. Okay, Is it clear? So there are two important points over here to note down. First of all, it is regarding if any enterprises is in the process of issuing the equities or debt securities, or if any of the enterprises whose equity or enterprises is or equity or debt instrument is listed on the recognized stock exchange, those must comply with the accounting standards. And further, if any of the enterprises if having the turnover exceeding rupees 50 crore, they also need to comply with the accounting standards. So here is a complete list of the accounting standard that AS went to AS 29, and recently there was change that AS 6 was dropped, that was related to the depreciation, and that was basically combined with AS 10. So AS 6 was combined with AS 10. AS 6, that is accounting standard 6, was related to the depreciation, and that is now combined with the AS 10, that is accounting standard 10, related to the accounting for fixed assets. So there will be a complete list that will be providing you the ePDF notes if you have enrolled into the courses in our Android application. Okay, so you can have a look at the different accounting standards that are related to. So you need not to go through all the accounting standards, because the question may be asked from this section itself, but due to but we are having 29 standards and you need to cram all those standards. So I have highlighted over here some of the important accounting standards. You just need to go through them and just keep an idea regarding that what accounting standard is related to what. You can take a screenshot of it, or you can directly look into it in the ePDF which is available in the Android application of ours. Okay, so that is regarding it. So let me take a pause over here so that you can take a screenshot of the same. Okay, so you can take a screenshot of the same. So let me do the needful for you. Okay, so if you want to take a screenshot, you can take a screenshot right now, this part. So there will be 2 screenshots that you have to take regarding it, or you can basically get the list from the ePDF itself. Okay, so then it is regarding the GAAP or GAAP, that is generally accepted accounting principles. Generally accepted accounting principles. So these are basic accounting principles and guidelines which are to be followed. So these are comprehensive rules, these are comprehensive standards and industry specific accounting practices which are to be followed when you are dealing with the accounts. Okay, so GAAP encompasses basic accounting principles. So generally accepted accounting principle is related to the basic accounting principles and guidelines, and further accounting standards usually issued by the premier accounting body of the country, ICAI, as in the case of the India itself. So you need to the accounting standards are basically issued by those. Okay, so ASB was formed, accounting standard board was formed, and which basically stipulates the accounting standards, and further those are mandated by the ICAI, and further these accounting standards are issued by these are issued by the premier accounting body. Okay, so industry specific accounting practices are further there to cover the unusual scenario. So it may be the case that particular industry is related and facing some issues in the case of the accounting, and it cannot be basically generalized for each and every firm. In that case, basically what it is done, it is covered under the industry specific guidelines. Okay, then in India, financial statements are prepared on the basis of accounting standards. So whatever the accounting standards which are issued by the ICAI, that is Institute of Chartered Accountants of India, the financial statements are prepared as per those accounting standards, and further the law laid down in respective applicable. So whatever law is applicable, if the company's law is applicable, accordingly you have to prepare the accounting statements. And while the basic accounting principles may not directly form part of the accounting standards, and the related laws, they are assumed and expected to be universally followed. So whatever the laws and whatever the related laws are there and standards are there, those to be followed universally. So what are the objectives of GAAP? So what is the objective of GAAP? So financial reporting should provide information. So what is the main objective? That is regarding providing the financial information. So financial reporting is to be there, and further it is useful to present to the potential investors, creditors and other users in making a rational investment. So whenever you are going to invest in some company, if you are going to deal with the stock of that company, or you are to be a promoter, or you are maybe angel investor, in all those cases you need to have some information regarding the finances of the company itself. So there must be some standards that must be followed, so that each and every company is following the same procedure. Okay, so if we say there are different 4 companies, A company, B company, C company and D company, if they are not following the same rules and regulations, if they are not following the same guidelines and procedures, in that case the person who is going to invest in that company, let us say person X wants to invest in any of the companies from ABCD and wants to choose one from the ABCD, in that case if the same guidelines and procedures are not being followed, it would not be possible now. So further, it is also helpful to present the potential investors and creditors and other users assessing the amounts, timings or uncertainty of the perspective of the cash. So if when you deal with the financial statements, you look into that part also, that what is the current ratio, what is the DSCR, if it would be possible for the company so as to pay off its debts in the near future or not. You need to conclude the different factors. You can also do that from the financial statement itself. So these are some of the objectives related to it. And further, third, it is regarding the about the economic resources. So whenever you need to look at the sources of the company, that what are the resources of the company, and further if there is any change, what is the recent change in the last 2 or 3 years, so you can look into the same. And further, it is regarding the GAAP. The following are the generally accounted principles which we'll be looking into. So these are some important principles that you need to understand. First of all, it is regarding the business entity assumption. So whenever we deal with the accounting, we are basically looking into the financial aspects of the company, of the firm. Okay, so let us say person A has set up a proprietorship firm. Let us say he has set up a proprietorship firm AZ. He has set up a proprietorship firm AZ. Okay, in that particular case, the AZ company or AZ proprietorship firm is different and the person itself is acting as a different entity. So both are working as a different entity. So owner is separate from the business itself. So business entity is separated from the owner entity itself. So it states that every business entity should be treated as an entity that is separate from the owner. So the business entity is looked at separately, and further the person, the owners, the promoters, those are looked at separately. So all the financial statements are to be prepared keeping in mind the business entity. Okay, so if person A has set up AZ using the capital of amount rupees 1 lakh, in that particular case, this particular capital is a liability for the company. This particular capital is liability for the company. Why so? Because for company AZ over here, or the proprietorship firm AZ over here, it is a liability because in any time in the future it will be having the liability so as to pay back rupees 1 lakh to the owner itself. So all the transactions will be recorded, particularly keeping that aspect in mind, that the business entity is different and the owner entity is different. Okay, then it is regarding the monetary unit assumption. So I already told you that in the case of the financial transactions, only and only those transactions are to be recorded. Only those transactions are to be recorded which are capable of being expressed in monetary unit. Okay, so if we are dealing with Indian currency, and if we can basically convert any of the transaction or asset related to it into the financial forms, only those transactions are to be recorded. If it is not possible so as to record the transaction in financial terms, in that case it should not be recorded in the books of account of the business. Okay, so if there is some transactions which cannot be converted into monetary form, in those particular cases the transactions should not be recorded in the books of account. Okay, further it is regarding the accounting period. The principle entails that the accounting process of business should be completed within a certain period of time, which is usually a financial year or calendar year. Now what is financial year? Financial year starts from 1st of April and is up to 31st March of next year. And what is calendar year? From 1st of January to 31st of December, that is a calendar year. Okay, so business is having a particular accounting period. And in Indian companies it is a financial year. It is a financial year itself. Okay, so company maintains the company, basically draw the accounts of the company as per in the usual period, which is said to be the financial year in case of India. And further, thus every transaction which relates to a particular accounting period will form part of the financial transactions prepared for that period. What does it mean? It means that if I purchased an asset on June 30th, if I purchased an asset on June 30th, 2021, let us assume that case, and further, one asset was purchased in January 6, 2021. So one asset was purchased on January 6, 2021, and the other was purchased on June 30th, 2021. And let us say there is another asset which was purchased on April 4, 2021. So if we consider the concept of accounting period or accounting period principle, in that case, these two assets pertain to the accounting period which is related in the same financial year. Whereas when we talk about this particular asset which was purchased on January 6, 2021, that is not related to the same accounting period. Okay, so thus every transaction which relates to a particular accounting period will form of the financial statement. So when we will be drawing the financial statements for 21-22, in that case particularly we will be taking into account these two transactions but not this particular transactions, because that was basically related to the previous year transaction. So here there comes a principle of the accounting period. Okay, then it is a case of the historical cost concept. I already have given you an idea regarding the historical cost concept. Let me reiterate it over here. So as per the general rule, what is being done, that if you purchased an asset in 2016, and as we know that we book depreciation on that particular asset, we basically do what? We book the cost of that asset on the cost when we purchase the asset. So when we purchased the machinery in 2016, it was worth rupees 1 lakh rupees. So we will be booking the cost at the historical cost, where the cost that we paid at that time so as to acquire the asset. Let us say in 2021, the same machine costs you 2.5 lakh. So it will not be the case that we will be booking the cost of that particular asset at the present cost. Okay, so we use the historical cost concept. So it is said as a general rule, when certain economic resources or assets are acquired by the enterprise. So whenever an asset is acquired by the enterprise, they are recorded as per the cash or cash equivalent that actually spent to acquire that particular asset or resource. So when we acquired that particular resource or particular asset, the amount we paid at that particular time, only at that particular transaction date, the amount we paid, that would be recorded for. Okay, so even if the transaction happened in the previous day, so even if we purchase let us assume the case that we purchased the machinery on 4th of May 2021 for rupees 1 lakh. Okay, and today the cost of the same machinery, on 5th of May 2021, the cost of the same machinery is rupees 1.5 lakh. Okay, but we purchased on 4th of May, not on 5th of May. In that case, the cost that would be recorded for is at rupees 1 lakh only. Okay, so that is the case. That is regarding the going concern assumption. What is a going concern? So whenever we set up some company or firm, it is basically not for identified amount of time. It is basically for a longer period. So if I am setting up over here a company over here, let us say I set up ABC company over here, I will not set up the company so that it may be liquidated in the near future. Okay, I will not be having that idea. So it would be a basic principle regarding that whenever a business entity is set up, it is assumed to be a going concern. That is, it will continue to operate for a indefinite amount of time. It will continue to operate for a indefinite amount of time. I'll not assume that this company will be dissolved or it will be liquidated in the near future. Why this assumption is there? This assumption is important because if the company is to be liquidated in the near future, in that case, all the assets of the company, whether it is asset or whether it is a liabilities, then these are to be valued as per the actual amount. Okay, so if a concern is going to be liquidated, in that case it is to be valued at the present cost. No, it is not to be valued at the historical cost. That is the point behind it, that we consider a concern to be a going concern when we are setting it up. Okay, that is regarding the full disclosure principle. What do you mean by the full disclosure? So an accounting entry may not independently be able to provide all the relevant information. So if we are having an entry in our books related that rupees 50,000 is debited, rupees 50,000 is debited, and further the cash account is credited, in that particular case it shows that cash has gone out, that asset has decreased and the other asset has increased, but it does not give us full idea regarding it, full picture regarding the entry. Okay, so there should be full disclosure. There should be full disclosure. The disclosures can be in the form of narrations. It can be in the form of narrations. It could be in the form of the footnotes in the statement of account itself. Okay, so that is regarding the full disclosure principle, that all the information related to the particular entity or the books of the accounts must be mentioned over there, so that all the people who are dealing with those financial statements or those financial transactions, they could understand those transactions as well. Okay, because the main purpose regarding the financial statements and financial transactions is related that the person whoever is concerned with those transactions or books of account, they could interpret, they could understand the entries, and they could understand the financial statements and could take a valuable decision based upon those transactions and those statements. Okay, so there should be full disclosure of the entries or transactions. Then it is regarding the matching concept. What do you mean by the matching concept? So this concept requires that revenue for a particular period is to be matched with its corresponding expenditures so as to show the true profit for the period itself. Okay, so what does the matching concept says? If we are talking about the financial year 2021, if we are talking about the financial year 2021, which starts from 1st of April 2020 and ends at 31st of March 2021, in that particular case, what would be there? So if we spent an amount worth amounting rupees 1 lakh rupees in that particular period, okay, and we are having income in the same period itself, okay, so we will be matching the expenses as well as the income to the corresponding period itself. Okay, so the concept requires the revenue of a particular period is to be matched with its corresponding expenditure. So the corresponding revenue must be matched with the corresponding expenditure so that we could have a clear picture regarding the profit itself. Okay, then it is regarding the accrual basis of accounting. Very, very important concept, and you need to understand the basics. You need to understand the basic regarding it. We will also be learning these concepts or principles later on in the units, but you should have an idea regarding it. Okay, so accrual basis of accounting, what does it mean? So let me explain it to you with an example. Okay, so let us say you're having a fixed deposit. You are having a fixed deposit in the name of the firm itself, in the name of the firm XYZ, and further this particular fixed deposit will be maturing on 31st of March 2021. So it will be maturing on 31st of March 2021, and interest amount of rupees 1.5 lakh will be paid. Interest amount of rupees 1.5 lakh will be paid, and you have this fixed deposit with some private firm. You are not having this fixed deposit in the bank itself. You are having itself with some private firm, or you have given a loan to a person. That would be a better example. Let us assume that you have given a short-term loan to some other person who will be paying you an interest amounting rupees 1.5 lakh. who will be paying an interest to you amounting rupees 1.5 lakh on 31st of March 2021. So basically you will be having a right to have rupees 1.5 lakh from the person A to whom you have extended a loan. Okay, so the company XYZ extended a loan to person A over here, who will be paying an interest amount of rupees 1.5 lakh to the firm XYZ on the particular date of the maturity of the loan. Okay, so you are entitled to receive 1.5 lakh from the person A on that particular date, but person A did not paid the amount to you. The person A did not pay any of the amount to you on 31st of the March, but you were entitled to receive that amount. Okay, and as you know that from 1st of April the new accounting period will start. Okay, but on the accrual basis of accounting, we will be considering this particular income of rupees 1.5 lakh. So you have not received the cash yet. So the main point is what? You have not received the cash yet, but you are entitled to receive the sum of money. You are entitled to receive that sum of money. So you will be basically considering it as a revenue on that particular date when you were entitled to receive so. Okay, so that is what? That is the accrual basis of accounting. So whenever you are entitled to receive the amount, but it may be the case that you have not actually received the amount in form of cash, but you were entitled to receive the amount, that would be basically considered as your income. Okay, that would be basically considered as your income. Same goes for the expenditure part. So if you were liable to pay the amount, but you have not paid yet, that is to be considered as an expense. Okay, so the principle requires all the revenues and expenditures to be recorded in the period it is actually incurred, and not when cash or equivalent cash has been received or spent. Okay, so whether the person A pays to the amount to you on May 2021 in the next accounting period itself, but you will be considering the income in the part 31st of the March 2021 because it is basically related to the previous financial year. Okay, so on the accrual basis of accounting, that is being done. Okay, then it is regarding the consistency. So an entity may decide to follow a particular accounting procedure in relation to the series of transactions. Such accounting procedures need to be followed consistently. So you have to follow those principles consistently. So if you are following an accounting procedure related to some transactions, you need to follow those procedures consistently. And further, it is not the case that you cannot change the procedures. You can change the procedures, but it is not like that you are changing the procedures on day-to-day basis. Okay, then it is regarding the materiality. This accounting principles allows an entity to disregard another accounting principle if the result of the same does not have a quite impact on the decision making. Okay, so the main purpose of the financial statement is for decision making. Okay, so likewise, I purchased a machinery worth rupees 10 lakh. And as per the SLM, that is straight line method of depreciation, there is a depreciation amounting rupees 1 lakh each year. And I am to book this depreciation so as to get a clear picture regarding the business. Okay, so that is my duty. I need to follow the accounting standards. But now the another case is that there is a stapler that you purchased. So you purchased a stapler amounting rupees 40, and further this stapler is basically a revenue expense over here. What is a revenue expense? Those expenses in which has been incurred, and further those would be utilized in the same accounting period itself. Okay, but this stapler may be having a useful life of 5 years, maybe for 2 years, maybe for 3 years, or it could be the case. Okay, so it is a case that I'm not going to replace the stapler from year to year. It is not the case. Okay, so if I'm using the stapler for a longer period, let us say I'm using it for the 3 years. So technically, as per the accounting standards, we need to book the depreciation per year. But what amount it would be? The depreciation amount it would be amounting around rupees 13.33. So Is it basically feasible? Is it making some changes to the decision making? No, it is not making any of the decision making and changes to the decision making. So the main thing is over here regarding the materiality. So it says that the accounting principle allows that an entity to disregard an accounting principle if the result of the same does not have any impact on the decision making. So even if I do not book the depreciation for this particular asset because it is very small in value, it will not alter my decision making. But if I do not book depreciation for this particular asset, it may change my decision making. It may change my decision making because quite handful amount is involved in this particular case. Okay, so that is regarding materiality. Then it is regarding the conservatism. What is the conservatism? That this means that while accounting for a particular transactions, all anticipated expenses or all anticipated losses will need to be accounted for. So whenever we are dealing with the financial transactions, so if there is any of the anticipated expense or anticipated losses which may be accounted for, you are not probably that much enough sure that they may occur, but you have quite expectance regarding it that they may occur. Those all must be recorded, those all must be accounted for. But if you have anticipation regarding that you will be having a profit, you will be having a profit of rupees 1 lakh. If I think like that I'll be making a profit of rupees 2.5 lakh this year, I should not be recording that profit. But if I think like that I can be having losses, I can be having expenses, those must be recorded. Okay, this is why provision for expenses like bad debt is made. Bad debt provision is made. So if person A was to pay you rupees 2.5 lakh, you were having an expectancy that you will be receiving the amount, but the person A does not pay the amount to you in time. In that case, that is a expected loss. That is a expected loss to you. So you will be basically booking the provision for the same. You will be booking the provision for the same. Okay, but if you are expecting a profit of rupees 1.5 lakh, you will not be recording that particular transactions. So it is as per the conservatism that all the anticipated expenses or losses are to be accounted for, but if there is any income, potential income or gain, those should not be accounted for. Actually they have earned or you have received them. Okay,